Disney beating on the top and bottom line, that better than expected performance driven by results of the parks division and smaller than anticipated losses in the direct-to-consumer streaming division. Take a look at shares, now up about 3%. Now, revenues of $23.5 billion, that grew 8% and beat expectations of revenue of $23.4 billion. Earnings coming in adjusted at 99 cents per share, beating estimates of 78 cents per share. Disney Plus subscribers nearly 1 million higher than anticipated at almost 162 million, with that core Disney Plus subscriber base, that's excluding Hotstar, up 1%. Total direct-to-consumer subscribers also falling less than anticipated to about 235 million. Now, losses at the direct-to-consumer division of about $1 billion was less than anticipated and also down from losses of $1.5 billion in the year earlier quarter. Now, the key thing driving the results, revenues increased 21% at the parks, experiences, and products division, while operating income at that division increased 25%, with particular strength in higher volumes as well as increased guest spending at the domestic parks. CEO Bob Iger saying in his quote at the top of the press release here, quote, "We are embarking on a significant transformation. We believe," going on to say, "we believe the work we are doing to reshape our company around creativity while reducing expenses will lead to sustained growth and profitability for our streaming business, better position us." And then, of course, Scott, I have to say, he talked about improving profitability. I'm sure he's going to be asked about that restructuring and cost cutting on the earnings call, which starts at 4:30 Eastern.
You know what, Julia, really quick, because I see this other quote, and I want your opinion on it because you know this so well. We're working to reshape the company around creativity. To me, that sounds like a shot across the bow at Bob Chapek, that one of the things that Iger talked about when he came back was putting decision-making back in the control of the creatives, the lifeblood, the heartbeat of this company. That, to me, is not lost at all on that statement.
Absolutely. And look, he had already taken steps to undo some of the restructuring that Bob Chapek did. Bob Chapek separating the creative decision-making from the distribution decision-making and having those be run separately. Iger already took steps to reintegrate those, and clearly here is talking about doing more to reintegrate those different parts of the business and try to make sure that they're profitable in all of their decision-making as they do that. Of course, there's a lot of concern about the high costs around the direct-to-consumer Disney Plus streaming business, which we saw the costs were not quite as bad as anticipated. But yes, this is very clear. Bob Iger has made it clear from day one that he really wants to prioritize the creative content and those decision makers when it comes to figuring out where to put the films, where to put the TV shows, et cetera.
All right, we'll hear from you again. I know that. The call's at the bottom of the hour, and that's really where the action, folks, is going to be. As you hear from Bob Iger himself on his first conference call since returning, what sort of strategic maneuvers does he talk about? And then the big event tomorrow, an exclusive interview, 9 a.m. Eastern time on Squawk on the Street. Bob Iger and David Faber go one-on-one, and you do not want to miss that. I can promise you that. Let's bring in Disney shareholders now. Brenda Vingello of Sandhill Global Advisors, Patty Brennan of Key Financial. It's great to have you both with us. Brenda is a CNBC contributor. So your first reaction here, Brenda, the Street's trying to figure out which way it wants to go, and it may not know until the call in some 20 minutes or so. But what do you think so far?
Fair enough, but I think if we look at the quarter, things were actually a little bit better than we thought they might be. One, we got confirmation that the last quarter, their fiscal Q4, was potentially the peak in loss for the streaming business, which is great news that things are moving in the right direction there. Secondarily, we got confirmation that they actually had more subscribers than anticipated, even in an environment where they raised price for the traditional product. We'd like to hear more about what the initial impact was from the ad-supported option being introduced. But I do think the conference call this time around is going to be really important. Everybody wants to hear from Bob Iger, hear about what his vision is for profitability of the company, and certainly about reinvigorating their creative vision. That we really own this stock because it's unmatched anywhere else, and think that ultimately Wall Street will reward the company for that over time.